What's up everyone, it's Scotty with Money Vesting. So in this video, we are going to be talking about, in my opinion, by far the best cybersecurity company called Fortinet, ticker symbol FTNT. It's been on my wish list forever, but of course the valuation's always been a little bit of a concern. So they are going to be reporting earnings next week. So my goal in this video is to break down exactly what the expectations are, go over the actual business overall fundamentals, talk a little bit about the intrinsic value calculated, and of course go over the technical analysis as well. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining. And I do want to point out that we do have the 16% annual discount expiring tonight. So after July 31st, it is going to go away. And of course, the 50% discount on the options course also expires after midnight tonight. So both of these will go away after July 31st, so August 1st. They will be gone. So links are going to be down below if you're interested in joining and of course taking advantage of these sales that we have going on right now. So Fortinet is a leading cybersecurity company in the S&P 500 and the NASDAQ 100 since 2018 and of course 2021. They've got a pretty significant TAM of $280 billion in cybersecurity, growing significantly faster than the overall market by expanding into other different new markets. And of course, Fortinet is one of the largest cybersecurity companies out there. And long-term industry drivers support our growth as well. So there's definitely going to be more and more demand for cybersecurity as the world becomes more digital, more people come online, more businesses start selling online. That's just the nature of where we're headed, right? Everything is going to be digital in the future. And cybersecurity obviously is a big role to play. So this industry definitely has a lot of growth potential, no doubt. And Fortinet is one of those top companies. Of course, Palo Alto Networks, CrowdStrike, some of the other ones are also part of this entire industry. But Fortinet, the reason why I like this so much is because it is damn consistent. And of course, it's profitable with an excellent balance sheet and management, which we'll talk about later in the video. But talking of consistency, they've got a rule of 40 that they basically apply. And the rule of 40 is the growth rate in revenue year over year plus the non-GAAP operating margins combined should be over 40. That's the rule of 40, and they have been able to do that every single year since 2009, since IPO, except for just a few years, 2009, 2013, 2017, they were just a little bit under 35, 36%, but they're expecting this number to once again achieve 49% this year. So 2023, at the end of this year, they're expecting 43%, so 23.5% growth in revenue and 25.5% operating margins. Last year, it was a little bit over 60%. You can see the last 3 years, they've been able to grow 47, 55, and 60%. So again, rule of 40 is basically that revenue growth year over year plus the non-GAAP operating margins should be a little bit over 40. This right here is going to be 2025 financial targets. So they're looking forward 3 years and they are expecting revenues of over $10 billion. That's going to be a 3-year CAGR of 21%. Actually, that's going to be the billings. Revenues of over $8 billion. That's going to be a 3-year CAGR of 22%. And operating margins of a little bit over 25% over the next 3 years as well. And they also mentioned highly fragmented industry ready for consolidation, meaning it's going to give them the opportunity to buy a lot of these companies, right? So for example, we've got Cloudflare, we've got CyberArk, we've got SentinelOne, we've got SecureWorks, Radware, A10 Networks, so many companies that are actually making less than $1 billion, less than $500 million in revenue that certainly are ripe for potential acquisition targets. And of course, the industry is going to consolidate. And that's with every industry, right? When there's a lot of high margins and return on capital is pretty high, you will at first see a lot of players, right? A lot of players will enter that market. And that's really true with every industry that you think of, right? Think about electric vehicles, right? When they were first getting started, think about how many EV makers were in the market. Every single day you used to have like a SPAC, which is an electric vehicle, and going public and raising funds, whatnot. But eventually the industry consolidates, right? The only ones that actually remain are the ones that they can execute. Idea is one thing. Execution is far more difficult than coming up with an idea. Idea is the easy part. Execution is far more difficult. And the companies that actually do thrive, do survive, do stand the test of time are the ones that have the best execution. Tesla is successful because of its execution, not because of its idea, right? Idea, yes, it was also the first mover. It had a significant first mover advantage, but that would have failed if they didn't execute well, right? Facebook was definitely not the first social media company out there. There was a lot of them, right? MySpace, Orkut, But Facebook survived and thrived because of its execution, not because of the idea. And that's why I like Fortinet a lot, because they've already proven their business model. They're valuable in a way that they are profitable, they're consistent, and they have validated, right? They've got the execution down to a point where, look at these numbers right here. Look at the consistency, right? 650 million revenue, growing that to over 4.4 billion. Gross profit moving in the same direction. Operating income, absolutely phenomenal growth here. Net income, just incredible. And diluted shares outstanding have actually gone down by about 1.5% every single year. So if you plug in some of those numbers, by the way, before we do that, excellent margins. So very high return on capital, assets, and equity. We've got 75-76% gross margins, net margins at over 20%. And this right here are going to be earnings expectation from $1.47 to over $5 per share. That's going to be a growth rate of just over 14 to 15%. Now, that being said, since everything is phenomenal for the business, even the balance sheet, $2.88 billion of cash with a little over $1 billion of debt. So we've got a negative net debt of $1.8 billion. So everything so far is phenomenal, right? It's perfect for Fortinet. What's not perfect? If you guys haven't guessed already, and you should because you've been watching my channel for a long time, it's the valuation, right? It's the actual pricing of the stock itself, the company, how much it's valued at. And right now, of course, we're trading at 52, 58 times earnings. Price to sales a little bit over 12. We've got enterprise value to EBITDA over 30 at 49, and price to cash flow at over 28 to 30. So definitely a little bit on the higher side when it comes to the valuation for this business. So our job is to do what? Our job as investors is to find great companies trading at great prices. Okay, I've said this before and I'll say it again. Our job is not to find great companies trading at bad prices, right? I mean, yes, you could, because you can wait for the prices to come down. Our job is also not to find, bad companies trading at great prices, because if they are bad companies, eventually the price will come down and they would be bad prices. Our job is to find great companies trading at great prices, and they will oftentimes be disconnected. The stock and the company are two different things, as we have talked about and learned from several case studies in the past. The company can do one thing, the stock price can do a whole different thing. Our job is to figure out, okay, can we find great companies at great prices? And for Fortinet, right now we've got a great company, but maybe not so much of a great price. And our job is to figure out what is a great price, right? What is a good deal? So if you come do some analysis on Fortinet, I'm going to go with 16% growth rate. We're going to come back to the P multiple. Let's just do 12% discount rate, 10% margin of safety, minus 2% in share buybacks. And now when it comes to the P multiple, there's going to be a lot of disagreement, and I know the fair value is going to be a lot lower than where it's trading at the moment, but that's the whole point of this exercise, is for us to understand when it actually becomes a good deal. All right, so P multiple, I'm going to go with like 20. Even then, the PEG ratio is going to be a little bit over 1. But right now, of course, it's trading at over 50, 55 times earnings multiples. So if I were to take a guess here, it would require at least a 50% sell-off from these current levels for Fortinet to be trading at its fair value, because the long-term growth is not that high. It's only 16% for earnings, right? 16% earnings growth is not like a super high growth stock. So why should it be trading at 40, 50 times multiple? Should be a lot lower, right? And the fair value is going to be at closer to 37. Oh, actually, it's not bad. It's not bad as what I was expecting. So right now, actually, you know what? $76. So yeah, 50%. Exactly what I was expecting. 51% potential downside needed, which is kind of in line with what my previous analysis was, which was a little bit under sub 40. So I think $40 is what I put down as a fair value on Fortinet last time. And that's, kind of similar to what we have here, $37, so sub 40 is what I would be looking at. And, that's the whole point of these analyses. Like, you want to be looking for great deals. That's the whole point. I want to find good deals, and, I am going to be cheap with my analysis. Like, I want prices to come down. I want to pay as little as possible for as much value as possible. That's the whole idea. And so this is going to be a very strong support here. I mean, I wouldn't mind starting positions here in the $40 range, but this one really obviously got away fairly quickly and has rallied a little bit over. So year to date, it's obviously higher a lot, up over 67-70% since January. Just absolutely incredible fundamentals, and up 55% on a year-to-date basis. So earnings wise, this right here is going to be the expectations. EPS is going to be pegged at about 34 cents per share with the revenues of over $1.3 billion. Very nice consistent validation from that 21 EMA. And actually, I wouldn't be surprised if it does potentially break down after the earnings come out, and $70 is going to be that next support level to watch, all the way down to as low as $60. That's going to be in line with those moving averages, and of course, this previous support level to also watch for Fortinet as well. So I hope you guys enjoyed this video, and let me know your thoughts down in the comment section down below. What are you planning on doing with Fortinet? Are you buying, selling, or holding? As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Don't forget, link to our Discord, Patreon is going to be down below, and the option scores 50% off. Currently, coupon code LAUNCH also available, and they both expire at the end of this month. So after midnight, it is going to go away. As always, happy investing. I'll see you all in the next video.